Hello, my name's Tim Hughes. I'm Director of Communications for the Spirit Invest Group. This morning I'm interviewing Mr. Marc Wiese, who's the Managing Director of Warwick Wealth. Marc, good to see you. You're going to talk to us today about the importance of diversification and risk.
Thank you, Professor Hughes. I think when looking at a client's investment portfolio, investment diversification is probably one of the most important things to look at, and it does come down to clients' views in the market and the goals and needs for the future. Harry Markowitz, being the father of modern investment theory and a Nobel laureate in economics, was quoted as saying, the only free lunch in investing is diversification. So it really does become a cornerstone of what we do for clients and looking at their overall investment goals for the future.
It's interesting. Why do you feel that risk or diversification is so important? Why is it important for the private client?
Well, I think clients have different risk profiles and different periods which they want to invest their monies. If someone's looking to invest for the short term and they might want to cash in or withdraw after 6 months, you obviously don't want to take exceptionally high risk and stock market might be down and withdraw when it's down. So for someone with a shorter time frame, certainly we would be looking at something a bit more conservative in terms of the overall risk profile and the investment diversification. Someone with a longer goal and someone who can stomach a bit more volatility, you might aim for something with a bit more risk and a bit more international equities, for instance, which in the longer term has yielded better results for clients.
So what are the different forms of risk diversification? How do you actually go about diversifying your risk?
Well, I think the first step is meeting with the client and discussing their goals and needs. As I mentioned, the period of which they want to invest, also looking at how much volatility they can stomach in terms of their own emotional position and their goals for the future. But ultimately, it does come down to looking at the various asset classes. Now, when looking at different asset classes, you can break it down into a very complicated set of asset classes, but generally, and the most simple way to look at it is you get equities, which is stocks or companies, where you invest in those companies, and they would have an increase, hopefully, over the longer term in terms of their market value, as well as dividends that pay out. And then you also have fixed income. So fixed income would be the likes of money market instruments, bonds, floating rate notes, effectively an agreement between an investor supplying money to an organization, and that organization would pay a fixed yield, either monthly, quarterly, or annually to that investor, for instance, like government bonds. Generally, if you're looking at investment grade fixed income instruments, the risk is a lot lower than it would be in equities, which would be a lot more volatile. So we're looking at this client's profile and looking at someone who's a bit more flexible and looking to invest for the long term or looking to invest for maybe shorter term. You would definitely weigh up the importance of fixed income versus equities. The next important thing around asset allocation and returns and risk profiling is local international. Now, we're looking at South Africa. South Africa makes up less than 1% of the global stock market. Effectively, most asset managers look at investing in maybe 60 to 80 of the JSE stocks. So it's a fairly limited number. We're looking internationally. Could be looking at maybe 5,000 to 6,000 different stocks, which most asset managers look at to invest in. It also brings up several new opportunities in terms of international diversification. When investing internationally, you obviously have the volatility of the rand versus the dollar or pound or euros, depending on where you're investing, which impacts the client's portfolio. So local international views, I think, are quite important, as well as the difference and the allocation between fixed income and equities.
Excellent. So Marc, just a final word for our viewers. Is there any sort of particular advice that you would provide to our viewers? So where should they look? What should they be doing with regard to risk diversification? What's your advice to them?
Well, I think the reality is it's a complicated world out there. I've mentioned two main asset classes, and asset classes do drive returns in the long term, I believe. But it gets quite complicated between industrials or property or what type of fixed income instruments you're looking at, the terms. Where this in the yield curve. So it gets very, very complicated. And I think for most people out there who have their own professions and their own expertise in other fields, it's probably the best to consult a professional and qualified wealth specialist, wealth advisor, that can guide them through that journey, look at the long-term planning that's been trained, it's got experience in the field, to guide them through that journey. So certainly for clients who need advice and guidance, speaking to a qualified and experienced financial advisor adds a lot of value.
And I assume that Warwick Wealth has lots of wealth specialists and advisors and wealth planners that can actually deal with clients and provide them with this type of risk diversification advice.
Correct. So Warwick's got offices across South Africa, in all the major metros, as well as most of the smaller towns across the country. So if any clients or potential clients are looking for a second view on their portfolio, just ensure that they're positioned the right way. Please feel free to contact us, send us a message via social media, or call us via 0800 50 50 50. And I'm sure we can put you in touch with one of our experienced wealth specialists and wealth advisors across the country.
Perfect. That's really, really helpful. Marc, thank you very much for your advice and contribution this month. I look forward to speaking to you again next month about a matter of importance with respect to private wealth management. Thank you.
Thanks, Tim. Thanks, everyone. Have a great day.